Hey, welcome back to Wait Let Me Invest. I'm Zuko, and today we're diving into my December update of my Vanguard stocks and shares ISA portfolio. It's been an incredible year, especially in the stock market, and there have been some changes in ISA account rules to keep an eye on. The S&P 500 rebounded from its worst possible year in over a decade in 2022, and it has maintained its positive momentum in 2023. Posting an impressive gain of around 21% through November 30th. However, it hasn't always been a smooth ride for investors, with most of the market gains occurring in early 2023. Despite concerns like inflation, rising interest rates, a regional banking crisis, and global geopolitical tensions, the US economy has demonstrated resilience, with corporate profits on the rise. Tech stocks, including the Magnificent Seven mega-cap giants like Microsoft, Tesla, and Apple, have made a strong comeback, leading the market charge, especially with the advancements in AI, with OpenAI, who has partnered with Microsoft, and Google, who just announced their new AI model, Gemini. The autumn statement brought in some changes to the ISA rules, adding an extra layer of interest to our discussion. More importantly, the ability to have multiple ISA accounts across multiple platforms and invest in fractional shares. In my last update, I celebrated surpassing the 20,000 barrier, with my portfolio sitting at £20,013.07. But guess what? It's no longer there, and I've set my sights on the 25,000 mark. Now, let's jump into my Vanguard ISA account. The total portfolio is currently valued at £21,985.15, up by £1,972.08 since my last update. I've also added another £1,666 this month, so in reality, I've gained about £306 in unrealized profits in the last 4 weeks. My current personal rate of return is around 15%, and my largest position is still the S&P 500, with a total cash value of £9,854.84. I've invested around £15,000 this ISA year, steadily progressing towards the maximum limit, which is around £20,000. Moving to the overall performance tab, the portfolio has generated an unrealized return of £1,045.40 since I started this journey. As you can see from the chart here, it's been growing steadily since its inception in 2022, with a high increase starting around April of this year, and it's because I've increased my monthly deposits from around £200 to £500 to around £1,666. And ever since then, it's been going up steadily again, as you can see. Switching to the year-to-date view, let me just change this to the 1st of January. And what that will show you is, through this calendar year so far, I've invested just over £15,500, and I've seen a growth of around £1,200. My overall rate of return this year is just shy of 11%, which is better than most savings accounts, which I think is pretty good. Moving on to the calculations tab, and I'm changing this back to the beginning. You'll see that I've got around £878 of unrealized gains, and I've made about £76 of realized profits from selling my FTSE Japan ETF holding last year, where I made a bit of a loss on that, and more recently I sold my US equity index funds and bought the S&P 500 ETF with them, where the sale from those index funds made me a profit of £56. My total interest is £2.15, which is the interest on cash held in this account to run invested dividend payouts and leftovers from buying whole shares. My dividends on the account is £105, which might not sound like a lot considering my investments, but I'm not too worried. It's a long game, and I haven't gotten this quarter's dividend payouts yet, but I'm expecting around £100, which is basically the entirety of my dividends since this portfolio's inception. Fees were also taken recently in early November, around £6, bringing the total to £17.93. Changing the view back to a year, and what you'll see is a very different picture. I've gained most of my dividends this year, and it's because I've managed to put in nearly £16,000, and the growth is better as well. So that meant that the more units I held, the more dividends I would have gained. The month-by-month tab just shows how well the market rallied in the last 2 months, after seeing all rates 3 months prior to that. The rest of the year looks good as well. I've had 8 positive months this year and only 3 negatives. So far in December, I've gained about £169, and in November I had my best month ever, gaining about £840. Funnily enough, October was my worst month ever, losing about £480. And it looked all doom and gloom, but I'm glad the market rallied thanks to the Fed's decision to keep the interest rates unchanged for a second consecutive time, which I think led investors to think that the central bank would stay put for the rest of the year. Moving on to the investments tab, where you can see all the products I've invested in since the beginning. I'm currently down 0.06% on the FTSE 100 in capital returns, which excludes dividends. But if we were to include dividends, my gross return is 1.93%, which equates to about £13.25. I sold the FTSE Japan for a loss a while ago, and I also sold the FTSE All World High Dividend Yield Index along with the US Equity Index Accumulation Fund for a profit of about £20. My best performing investment is the S&P 500 ETF, which comes as no surprise really, because major tech companies make up most of its weighting, and they've all been doing really well. It's seen a gain of around 21% since the portfolio's inception, which equates to £603 in total gain. We'll change the time frame to a year, and you'll see most of the products have a positive capital return percent, which doesn't take into account the dividends earned. The only investment that's down in that respect, as I've mentioned before, is the FTSE 100. Onto holdings. The Life Strategy Equity Fund and the Target Retirement Fund are both accumulations. Whatever dividends that I earn in these two accounts will be reinvested automatically. And I hold about 10 units of the Life Strategy Fund, which equates to about 14% of my portfolio. Same with the Target Retirement Fund. Currently weighs at 14%, which is ideal, which is what I want it to be at. I have 17 units of the Target Retirement Fund. Coming down to equities, the FTSE 100 is currently weighted at 7% with 51 units. I'm trying to bring this down to 5% because I'm not too sure about the UK market, as it seems a bit unstable at the moment and I don't want a lot of exposure to it. The FTSE All World ETF, on the other hand, weighs at around 13%. I'm trying to bring this up to 15%. I currently have about 33 units. And finally, the S&P 500, which takes up nearly 50% of the portfolio with 156 units. The Insight tab breaks down my investments by geographical region, my top 10 investments, and also the sector allocation, which remains largely focused on tech stocks. But more importantly, it shows how my portfolio has been performing in the last 3 months. So I started with £16,557. I contributed around £5,000, and that has returned me £423, which gives me a rate of return of 2.28%, which isn't really too good. But given that October was the worst possible month for me, I'm happy that this is still up by 2.28%. So that's all for December's Vanguard ISA portfolio update. I'll catch you in the next video. Peace out.